Hello accounts people, time to have a look at markup and margins. So topics that are often confused. I know some fairly intelligent people that still get them confused and have been teaching it for years. They're most often used during incomplete records questions on AAT level 3 on the financial accounts prep paper. They are alternative methods to each other. They relate the cost of goods sold to profits and or to selling price. Both are in regular use at different times in the real world. They both have their functions. They may be part of a decision making process, so for instance a retailer decides whether to sell an item or not, having worked out the margin. Decisions come up in other units, not the financial accounts prep unit. So what I'm going to do is take you through markup first, then margin. There's some questions here in pairs. I'm not going to do all the answers on this table, but I'll put the answers up afterwards, so that gives you a chance to do a few practice calculations, and then at the end it'll take about 20 minutes. I'll have a quick show of different ways of trying to remember the difference between markup and margin. So markup's the one that is logically the easiest. We simply add an amount to the cost. So for instance, items that cost £50, add another 100%, another £50 or double the cost. This gets us £100 selling price. So the cost in a markup calculation always 100%. Selling price is always 100% plus the markup as a percentage. So in this case, items that cost £200, we're going to add 40% markup. Markup then will be 40% times the selling price. And then the selling price will be the markup plus the cost. And then the selling price will be 140%. 100% cost plus 40% markup. So these questions are in pairs. They're every combination I can think of. I'll just do the top ones on each and leave you to have a go at the second ones and then check the answers. So markup, then we've got cost and the markup as percentage, the simplest possible way, working forwards, unlike the questions in the exam will be. So the markup is going to be 10% of the cost. So if the markup is £500, cost 500, selling price is 5,500, and that means the selling price as a percentage is 110%. 100% cost, 10% markup. So now we've just got the markup in pound terms. Well, that means we can work out the percentage. So it's the markup in pounds divided by the cost times 100. Means that we've got 66 point whatever, however many decimal places the question tells you, 67% to the nearest percent. Selling price, well, 600 plus 400, and that means our selling price is 167%. So variation on the theme then, we've got the cost, we've now got the selling price, so the markup will just be the difference. And then as a percentage of the cost. So 25% markup, the selling price will be 125%. So now we've got our selling price. Maybe we're taking a decision on this. We need to make 50% markup. Look at the cost. It's either what we've got to buy it for or as a target manufacturing cost. So £3,000 selling price, 50% markup. That means that the selling price is 150% of the cost, which means we can take the cost, the selling price rather, divide by 150 times 100. So we're going backwards now to give us our £2,000 target cost. Markup in pounds, well, that's the difference between 2,000 and 3,000. Get the right number of zeros. Yeah. So now we've got a selling price as a percentage and in cash terms. That means the markup must be 100%. So 100% cost, 100% markup equals 200%. Doesn't matter which one of these we do first. They're actually the same answer. 8,000 divided by 200 times 100 will give us the markup in pound terms. Obviously markup of 4,000. Same calculation, and let's double check it all adds up right. So now we've got a selling price and a markup in pounds. That means the cost must be the difference. 150 minus 100 is 50. So now we can just work out everything else. So if we take the markup, divide by the cost times 100, it tells us that it's 200%. Well, that's okay. We have doubled our cost as a markup, and then that means we've got 200% markup, 100%, 300% selling price. We have tripled our cost. So now we've got cost with a pound sign and a selling price as a percentage. So that means that's 100%, that's 250%. The markup percentage is 150%. This all relates to the cost, so the markup equals the cost divided by 100 times 150 will give us £150 markup. Selling price, the cost plus markup. Or we could have worked it out as 250%, so we could actually have also done 100 divided by 100 times 250. So let's have a look at the rest of the answers. Key calculations here. Obviously you can pause this or screen dump it or something. The answers are all the blue bits rounded up as required. These are all just whole percentages. And then the key calculations, not the whole calculations, but just the ones that really matter that you should have used to work this one out. So that's markup with some sample calculations, but let's try and put it into the real world situation. So now we've got a client and they've had their inventory stolen. They need to put an insurance claim in. We don't know how much was stolen. We need to verify it. We need to prove it in good accounting practice. So what we do know then, we know they're opening inventory because that's in last year's accounts. The purchases are in this year's accounts, and the sales, they know the sales to date. It was the inventory stolen, not the computer system or the till. And they use a markup, maybe an average markup calculated on last year's or the year before's accounts of 100%. So if we take our sales, we know that that's 200% because it's the 100% of the cost plus 100%. So we can work out our cost of sales. So our cost of sales was 9,000. So we've got opening inventory plus purchases minus closing inventory is our cost of sales. So we can probably work that one out. It's 3,000. Or we can do 9,000 and then minus. There's our 3,000 cost of sales. Double check. 1, 12 minus 3 is 9. And our gross profit will be the 18,000 minus 9,000. Not that we needed that for our insurance claim. My keyboard's playing up. Okay, now it's done. So we've worked out our cost of sales first, then our closing inventory. Very common form of exam question. So that's markup, the one that's most logical. Margin sometimes slightly easier in terms of the calculations. So margin, we're now working downwards from our selling price. So the sales is 100%. And the margin means that gross profit or gross profit margin as a percentage of the sales. If they wanted you to calculate net profit as a percentage, it would have to say net or operating or profit for the year from sales. So in this case, the selling price is always 100% in calculation, so you won't see a percentage more than 100. So in this case, sales are 2,000, we've got this worked out here, profits are 500, the margin is the 500 divided by 2,000, so we're now using sales as the base, times 100, 25%. If the margin is 25%, the cost must be 75%, because that's got to add back up to 100%. So if we now do 75% of our sales, we get our cost, and then that adds back up 1,500, 500, back up to the 2,000. So it's a different way of working out, but effectively fills in the same columns, just in different ways. So I'll do the same. These are sets, pairs, every combination of numbers we can think of. So starting off, working downwards, we've got a selling price of 3,000. That is the 100%. So our margin is 40% of this. 40% of 3,000, and our cost will be the other 60%. 6%, 40% is 100%. Far too easy to be a level 3 question, so we'll have some more awkward ones. So now we've got the margin as a pound sign, or as a percentage. Divided by the selling price times 100. So that means the margin is 25%. The cost must be 75%. So 75% of the selling price is the 3,000 cost, £1,000 margin, adding up to £4,000. So next pair, we have our selling price, we've got our cost as a percentage, divided by sales times 100. The margin has got to be the other 25%, bit like the one up here, but different numbers. 25% of selling price. Getting a bit long-winded, but no, actually routine, sometimes practice, get used to the idea that margin, we're talking about something to do with selling price. So now we've got the cost as a percentage, we've got the selling price. Well, that means that must be 60%, 40% and 60%. So now we can just work out the numbers of sales. We could work this one out as the difference, or we could do 60%. And then double check, it adds back up. 320, 480 equals 800. Again, different combination. So we've got a cost of 200, cash terms, and a margin, a percentage. Well, that means we can work out what percentage the cost is, because that's got to be 60%. So if £200 is 60%, we can take the 200, divide by 60 times 100 to get the 100%. Nearest pound if required. And this one, we've got alternative ways. We could either just work out the difference, or we could again take the 200 divide by 60 times by 40, get the same answer as if I took the 200 off the 333, £133.33, and that adds back up. So now it looks like we've got less information, but we've got the cost and the margin as a pound sign. Well, if the cost is 80%, the margin is 20%. So that means our £50 now is 20%. So if we take 50 divided by 20 times 100, that will give us our selling price. And again, 250 minus 50, or we could just take the 50 divided by 20 times 80 to work out what 80% is, and double check it adds back up right. One last pair then. So 800, we've got the cost and we've got it as a percentage. So we know the margin is got to be 55%. So if we take the 800 divided by 45 times 55, we'll get our margin. And if we take the 800 divided by 45 times 100, we'll get our 100% figure. Double check, that plus that equals that. So a quick look at the completed answers, again with sample key calculations. These are the ones that really matter. Obviously this is me just working out the percentages, and then have a go at those and just double check every combination you can possibly think of. So now let's apply it. Same situation, except this trader now works on a margin of 60%. We've got the same opening inventory, purchases and sales. So that means that that 18,000 is now our 100%. Our cost of sales is 40%. And our gross profit, not that we need it to work out the inventory. So 18,000 minus 7,200 equals 10,800. So again, 12,000 minus something equals 7,200. $12,000 minus 4,800, 7,200. So just a reminder, we're only talking about gross profit unless told otherwise. Margin, often use lots of items at varying prices, so we're working out a mixed batch of what we make and sell, particularly if we've got a market led price, so we know what price we can sell something for, and then we work out our margin. So different ways of remembering it then. So on this one, fairly technical way, let's have a look. Our markup then, the cost is always the 100%, the selling price is the markup percentage added on to the 100%. So in this case 30%, 100% cost, 30% markup, making a total of 130%. Margin works the other way around, 100% for the total for the selling price. So with 30% margin, the margin's 30%, that makes the cost 70%. Another way of remembering it, one of my slideshows I use, this is Mark. And this is Marge. Yes, she's pregnant. They're expecting baby profit. So at the moment, profit is in Marge. So when she steps on the scales, the weight includes baby profit. So 100% is both. Mark, of course, can't hold the baby till she's born. Then he's got to pick the baby up. So then when he steps on the scales, the weight is his own weight, 100% plus the baby. If that helps you to remember it, it works. If not, use the more technical ways. Lots of practice, not just in incomplete records questions, but obviously lots of other business activities at the same time.